Coming up on today's program, IMF sees South Africa's economy contracting 7.2% even after loan injection. Zimbabwe to resume stock trading next week. Plus electricity trade to unlock affordable and reliable electricity in West Africa. Hello and welcome to Business Incorporated. I am BC Adebayo. Well, let's get the show started with intraday market numbers, and major markets we track here in Africa were mostly positive at intraday, with the South Africa's JSE up by 0.16%. In Nigeria, the main index was also 0.16% higher. Elsewhere in Egypt, the index rose 0.25%, while Kenya closed Tuesday's session down 1.87%. Meanwhile, major stock markets in the Middle East are in the red, with the Qatari index losing 0.04%, while Saudi Arabia's benchmark index gained marginally by 0.05%. Elsewhere, Abu Dhabi's index maintained its drop from Monday, losing 0.45%, and in Dubai, the main index was down 0.7% as at intraday as well. And in Europe, stocks were roughly flat today as countries around the world report rises in new coronavirus cases, while a fresh U.S. relief package hit an impasse in Washington. Well, let's head over to Frankfurt. Well, Chelsea Dulani, okay, Chelsea is not ready just yet, but let's move on now and turn to Asia, where stocks were mixed today as investors await the Federal Reserve's interest rate decision. Now, mainland Chinese stocks led gains regionally, with the Shanghai Composite up 1.05%, while the Shenzhen Component jumped 1.85%. Hong Kong's Hang Seng Index edged 0.12% higher, while South Korea's Kospi was higher 0.2% in afternoon trade. The S&P ASX 200 in Australia dipped fractionally, and Japanese stocks lacked their pairs in the region's major markets, with the Nikkei 225 and the Topix indexes declining 1.02% each. Well, let's return now to Europe, where stocks were actually flat today as countries around the world, of course, report more cases of coronavirus. Well, Chelsea Dulani is ready for us. She's reporting live from the Frankfurt Stock Exchange. Good afternoon, Chelsea. Well, German government ministers will be grilled today in Parliament over the collapse of German fintech firm Wirecard as the political fallout from the scandal widens. What could come out of this hearing?
This is expected to be a very important hearing today. So a lot of the questionings, a lot of the parliamentary investigations so far have really centered around the regulator, BaFin, the banking regulator that was supposed to be overseeing Wirecard and had somehow missed several years of these accounting fraud allegations. But today's hearing is really going to be focused on some of the top politicians in Germany. So the finance minister, the economy minister, they're really going to get some tough questions today. And what they're likely going to be asked is how long ago did they find out about these allegations? So we've already heard that the finance minister knew as far back as 2019 that Wirecard was facing a lot of allegations of accounting fraud. It's not clear why those weren't taken seriously. He's likely going to have to answer some questions about this. But this is also, as you said, it is becoming more and more political here in Germany as well, because the finance minister, first off, is seen as a successor, a potential chancellor candidate to succeed Chancellor Angela Merkel. So this is really becoming a big political problem for him right now. And this likely today's hearing is likely just the beginning of what would become a much bigger parliamentary investigation into what went wrong at Wirecard. And that would really up the pressure on not only the regulators who missed this, but also politicians involved as well. If it does become a parliamentary investigation, for example, Chancellor Merkel could be questioned in public as well. So there's certainly a lot riding on this.
Also getting a grilling are the heads of tech giants Facebook, Amazon, Apple, and Google. They will be questioned in front of U.S. Congress today about whether their companies have too much power. Could there be changes coming to regulation in the U.S.?
This has been a topic of discussion for several years now. Regulators in the U.S. have opened many investigations into all of these companies. Of course, all of these companies are sort of playing in different fields. So the allegations, the criticisms all vary, but they're really centered around the fact that these companies are seen as having too much power. They're seen as being monopolies in these markets. So for Amazon, that's e-commerce. For Facebook, that's social media. For Google, online advertising. So, but really what these companies all share is that they control a large part of this market, and they have been accused of using that power to shut out rivals, to stifle competition. But it is also quite difficult in the United States to bring these charges because antitrust law is quite dated in the United States. It was really formed in the late 1800s, the early 1900s. It hasn't been updated for the digital age, so it could be very difficult for regulators in the U.S. to bring antitrust competition charges against these companies. But one thing they could do, and one thing that has been widely discussed, is potentially forcing some of these companies to either break up or to roll back some of these acquisitions they've made. For example, Facebook and Instagram. That's certainly been one of the topics of conversation of how they could sort of get around the legal challenges of bringing antitrust cases.
Meanwhile, Chelsea, Germany's Deutsche Bank managed to turn a small profit in the second quarter despite rising losses on loans from the virus. What drove in the quarter?
So for Deutsche Bank, this was, yes, a bit of a surprise that they managed to eke out a profit this quarter. They obviously, like all banks across the world, are really struggling with the economic situation, with rising delinquencies on loans, on mortgages, things like that. But they also are really benefiting from the increase in trading. So Deutsche Bank, for example, saw a huge double-digit increase in debt trading. So definitely in their trading arms, where they're buying and selling things on financial markets, that's really been quite good for most banks, and that's really helping them to offset some of these declines in other parts of their business. But they still are, of course, struggling. They had to set aside several hundred million euros to account for new bad loans. So this is really an okay quarter for Deutsche Bank, but there's likely to be a lot more damage to their business going forward from this pandemic.
All right, Chelsea, many thanks, and do enjoy the rest of your day. And all eyes are on the U.S. Fed decision rates meeting today, and the markets in the UK are not left out. Well, let's cross over to our London studio where Juliana Olayinka is standing by to tell us more about what's driving sentiments this afternoon. Good afternoon, Juliana. Tell us, what are the markets in the UK expecting to hear from the U.S. Fed's rate decision later today, and how are the markets performing at intraday?
We're expecting a lot. I suppose all traders across the world are keeping a close eye on what the Fed do or don't do, or how and when they're going to try and assist the ailing US economy. We already had a little bit of spectacular news because earlier this week, of course, the US Republicans, they unveiled a new $1 trillion coronavirus package yet to be agreed upon by the Democrats. But we saw little gains on the dollar following that announcement. So we're not expecting much movement. But as I said, everyone's watching it. The FTSE All Shares doing pretty well at intraday. It's up 0.23%. FTSE 100 is also up by 0.39%, and the FTSE 250 is down by 0.25%. In currencies, the pound is up against the US dollar by 0.29%, up against the euro by 0.04%, and up against the Japanese yen by 0.20%. There's clearly a rally on the markets, but I've got to say the travel stocks are still faring pretty badly after that Spain quarantine row that the British government are currently embarking on. Ryanair, the budget airline, they're down 3%, and IAG, the British Airlines owner, and EasyJet are both down 2% at intraday.
Now, Juliana, the government has signed a deal with pharmaceutical firms GlaxoSmithKline and Sanofi for 60 million doses of a potential COVID-19 vaccine. What will that mean for the UK if this is successful?
Well, what it would mean is that the British government can secure the health and well-being of their citizens if, as you said, the vaccine is successful. This is the fourth vaccine that the British government have signed a deal. I believe it was signed earlier today, and it's worth about £500 million. I suppose what the British government are hoping is going to work is the partnership between Oxford University and AstraZeneca. That appears to be the world leading vaccine at the moment. It's got the thumbs up by the World Health Organization. And if that's successful, that should be on the market by the end of this year. With this GlaxoSmithKline Sifanair partnership, they're hoping, the British government, if it's successful, that it can go to the most critically ill patients by mid 2021. So what the British government have done is they now have over 250 million doses of vaccines ready to go should they be successful, which means, if my calculations are right, every individual in Britain would be able to get 4 doses, which is pretty good considering, obviously, the British government have been pretty poor at handling the COVID infection here. Some would say that, of course. We're currently about the 4th in the world of the fatal fatalities because of COVID-19. So they're really trying to get way ahead of the rest of the world when it comes to vaccines. And we know that vaccine is the only way to curb COVID-19 because economies are completely battered and, in such a critical state. Alok Sharma, the business secretary, he was one of the ministers signing that deal. He said earlier today that our scientists and researchers are racing to find a safe and effective vaccine at a speed and scale never been seen before across the world. Whilst this progress is truly remarkable, the fact remains that there are still no guarantees.
Well, everyone is still waiting anyway. Thank you, Juliana. We'll see you again tomorrow. Stock futures were little change in morning trade today as investors await a congressional hearing on antitrust in big tech, as well as the Federal Reserve's latest policy decision. The Dow Jones Industrial Average futures gained just 4 points, while the S&P 500 futures and Nasdaq 100 futures traded in positive territory. The busiest week of corporate earnings rolled on after the bell on Tuesday, and investors will access more results from Boeing, the General Motors and General Electric before the bell today, while Qualcomm and PayPal are among the companies reporting after close on Wednesday. And oil prices rose in early trade today after an industry report showed that crude inventories in the United States fell against expectations, giving the market a boost amid record increases of coronavirus infections in the U.S. and elsewhere. Brent crude futures were up 0.3% at $43.36 a barrel, while U.S. WTI crude futures gained 0.1% to $41.06 a barrel. Data from the American Petroleum Institute shows that inventories of crude oil in the U.S. dropped by 6.8 million barrels last week to 531 million barrels. And gold prices steadied earlier today as worries over rising cases of COVID-19 and expectations of possible inflation from more stimulus measures underpinned the metal, while investors awaited the U.S. Federal Reserve's meeting outcome later in the day. Spot gold was little changed at $1,957.84 a barrel, or an ounce rather, while U.S. gold futures rose 0.5% to $1,954.50. Silver dropped 1.1% at $24.31 an ounce. Platinum was down 0.1% at $947.29, and palladium slipped 1.1% to $2,259.52. When we return in just a moment, we'll take a look at the Monetary Policy Committee of the Central Bank of Kenya. Stay with us. Welcome back. The Monetary Policy Committee of the Central Bank of Kenya is meeting today to review the outcome of its previous policy decisions and recent economic developments and decide on the direction of the central bank rate. At its last meeting held on June the 25th, the committee decided to reconvene within a month for an early assessment of the impact of the measures which have been put in place and, of course, the evolution of the COVID-19 pandemic. But joining us to discuss expectations ahead of the meeting is the CEO of Call Street Research and Analytics, Mr. George Bodo, who joins us from Kenya. Good afternoon, Mr. Bodo. Thanks for joining us on the program. Well, some analysts predict that the CBK is likely to retain the base lending rate at 7%, as additional rate cuts will not lead to private sector growth, given the reduced economic activities, of course, caused by COVID-19. Do you agree with this?
Yes, I agree with you, and I think the committee is at crossroads, if you ask me. Some of the measures they instituted a couple of, about 2 months ago, are yet to have an effect in the economy. And as you say, that despite some of the easing measures that they announced, the private sector credit hasn't picked up. And this is largely because, as you rightly point, that the economy remains in a frozen state. There's nothing much happening, largely because of the lockdown measures that were announced in March. Some of them have had a significant negative impact on economic activities. So largely, if you look at, for instance, private sector credit growth, it's under around 5%, and that's very, very low. And I don't think that any additional measures would stimulate credit growth. I think the problem is more on the demand side. When you have a demand side problem, it becomes a bit difficult for the committee on the extent to which they can stimulate private sector credit growth.
Now, how would you assess the impact of the measures that have already been put in place by the monetary authorities, given the evolution of the COVID-19 pandemic, especially since the committee last met in June?
I think that the measures, especially on some of the measures, for instance, they actually cut the reserve requirement for commercial banks by almost 50 basis points, and this released some liquidity into the system. However, we haven't seen any corresponding growth in private sector credit. And as I said, the problem is largely on the demand side. The private sector credit growth momentum is still very weak. Some of the things that they did also actually have counter effect. Like, for instance, the local currency has become under immense pressure against the US dollar. And this has actually triggered the central bank to actually sterilize some of the liquidity that they release in the system. They've actually been withdrawing some of the liquidity. So it's actually a policy puzzle. On the one hand, they're actually easing liquidity. They're making it easy for commercial banks to access liquidity. But at the same time, they're actually withdrawing liquidity in the money markets. So it's actually a puzzle for them. And also some of the things they've done also on the look at the price, consumer prices, for instance. Consumer prices are largely remained very stable. Actually, the threat now is that we could have consumer prices decelerating, which is essentially pointing to a deflationary environment because, again, demand side weaknesses. And that can actually become even more puzzling for the committee, and it could be difficult for the committee to fight prices going downwards.
Now, on a broader perspective now beyond Kenya, how do you see most African countries navigating these tough times, particularly caused by the outbreak of a coronavirus?
I think the key thing here is the fiscal side, which, by the way, I need to mention that the fiscal side remains a threat to the efficacy of monetary policy measures being outlined. Essentially, when you have demand and supply side frozen the way it is right now, you really need the fiscal side to be very accommodative in the sense that tax measures needs to be very soft. The government needs to roll out, basically the government needs to underwrite the economy. Accommodative tax policies, the spending policies need to be able to gear towards resuscitating businesses and also giving more incentives for businesses to continue employing, which they are not doing right now. For instance, Kenya unveiled an economic stimulus program of just about $500 million, which is not really sufficient to stimulate an economy of $90 billion. And some of the spending priorities that were outlined in that stimulus program, they're not enough to stimulate the economy. And actually, that's the key thing. Even from the other East African countries, the key now is on the spending side. The government needs to underwrite the economy by spending in key areas that will generate jobs and also be soft on the tax side, make sure businesses can be nurtured through this crisis.
Would like to thank you, CEO, Call Street Research and Analytics, Mr. George Bodo. Thanks for speaking with us on the program. Barely 24 hours after approving $4.3 billion in emergency financing for South Africa, the International Monetary Fund is saying that the country's economy is likely to contract by 7.2% this year due to the impact of the coronavirus. In a country report compiled by its executive team published on Tuesday, the IMF says the recession would limit the government's ability to reduce debt and embolden fiscal deficit. The Washington-based lender believes despite the sizable relief package, the pandemic will drive the economy into a deep recession in 2020 with adverse implications for the fiscal deficit and debt. The $4.3 billion IMF loan is part of $7 billion in planned borrowing from international financial institutions. Zimbabwe's finance minister has announced the resumption of trading on the stock exchange from August 3rd following the conclusion of the Financial Intelligence Unit's investigation. However, 3 stocks also listed on other exchanges, including the local unit of Old Mutual, will remain suspended. The finance minister, Mthuli Ncube, explains that investigations had revealed that investors were using Old Mutual shares as proxy exchange rates implied by their prices on foreign bourses, such as the London Stock Exchange. But there was no evidence that the companies Old Mutual, Pretoria Portland Cement, and Sidco International were involved. The government suspended trading on the bourse last month, saying it was being used by black market traders to undermine the Zimbabwe dollar. The World Bank has approved a total of $300 million in International Development Association credits and grants to support reforms that will help promote electricity trade in West Africa. The West Africa Regional Energy Trade Development Policy Financing Program seeks to remove barriers to electricity trade, which will lower electricity costs for consumers, support the competitiveness of firms, and improve resilience and reliability of supply. The program, being implemented by Burkina Faso, Cote d'Ivoire, Guinea, Liberia, Mali, and Sierra Leone, aims to facilitate trade in clean and low-cost electricity generated from gas, hydropower, and renewable energy across borders. This will replace the more expensive electricity generated from inefficient small-scale oil-fired and diesel generation and improve the reliability of electricity services. And that's where we end today's program. Thank you for watching. I am BC Adebayo.